When evaluating an initial public offering, a lot of novice investors will jump straight to revenue multiples. It's totally natural. But institutional analysts, they almost always start with a much more consequential question. Who actually pulls the strings? Because at the end of the day, the individuals at the helm are the true driving force behind a business's vision, its strategy, and its long-term direction. Welcome to Part 7 of our DRHP Explainer series. I'm your host, and today we're going to dive really deep into the promoters and promoter group section of Indo-MIM's draft red herring prospectus. We're going to use this filing to map out the exact ownership structure of the company and uncover the people who truly hold the power.
Okay, here's our roadmap for this explainer. We'll start with the power of promoters, meet Indo-MIM's leadership, unpack their wider promoter group, map out the ownership, look at governance risks, and wrap up with exactly why this matters for your investment thesis. Let's get into it.
Part 1. The power of promoters. Let's just quickly establish the basic theory of corporate control.
So, in the context of the Indian stock market, a promoter is essentially the individual, family, or corporate entity that originally founded the company or currently holds ultimate control over its affairs. The Securities and Exchange Board of India, or SEBI as we all know them, mandates absolute transparency regarding these individuals through its ICDR regulations. Why? Well, because when you buy a share in an IPO, you are effectively entering into a partnership with these promoters. SEBI demands that every single aspect of their background, their other business interests, and their shareholding is laid completely bare in the DRHP. They want the public to know exactly who they are getting into business with.
Now, you might be wondering, what's the actual difference between promoters and professional management? It's kind of like the difference between the architects of a house and the builders. Promoters are the architects. They hold the equity, they set the overarching vision, and they determine the long-term direction of the company. Professional management, on the other hand, your vice presidents, general managers, functional heads, they're the executives hired to execute that vision. They handle the day-to-day operations, but as you'll see with Indo-MIM, those lines can often get a little blurred when founders maintain tight operational control.
Part 2. Meet Indo-MIM's promoters. Let's look at the specific individuals guiding this company.
All right, looking right at the DRHP, there are 4 individual promoters at Indo-MIM, and they're all part of the Chivukula family. First up, we have Krishna Chivukula, the chairman and managing director. He's been associated with the company since it was incorporated and brings over 20 years of experience in the metal injection molding, or MIM, industry. Next is his son, Krishna Chivukula Jr., who serves as the whole-time director and chief executive officer. He's been with the company since September 2004. Moving away from that core operational duo, we have Jagadamba Chandrasekhar, listed as a non-independent, non-executive director. Interestingly, she's a retired doctor. And finally, Raj Chivukula, also a non-independent, non-executive director, whose occupation is simply listed as business.
And crucially, these promoters aren't just sitting on the sidelines holding shares. They are deeply integrated into the company's highest governing body. All 4 of them hold seats on Indo-MIM's board of directors. So they aren't passive shareholders. They are actively dictating capital expenditures, strategy, and the entire governance framework of the company. Krishna Chivukula and Krishna Chivukula Jr. are the executive directors running the daily show, while Jagadamba and Raj act in non-executive capacities.
Part 3. The promoter group unpacked. Regulators actually cast a much wider net than just the core founders.
So, SEBI regulations require a company to disclose what's called a promoter group. This is a pretty big umbrella. It includes the immediate relatives of the promoters, spouses, siblings, children, as well as any corporate entities, holding companies, trusts, or LLPs where the promoters exercise significant influence. And the scale of this can be absolutely massive. Get this, the DRHP discloses that Krishna Chivukula is a director in 76 Indian companies alone. 76. The reason regulators demand this exhaustive list is to track all potential related party transactions and any possible conflicts of interest. Within this massive group, the DRHP also notes Anuradha Koduri as a key individual shareholder from the promoter group, holding over 5.4 million shares.
Part 4. Mapping the ownership. Let's trace the hard data and see exactly where the equity sits.
At the very top of the corporate hierarchy sits Green Meadows Investments Limited, which is a Mauritius-based entity. This corporate promoter holds a staggering 90.84% of Indo-MIM. But who controls Green Meadows? Well, it's ultimately held by Jagada Investments Limited, where the natural persons in control are, you guessed it, Krishna Chivukula Jr., Raj Chivukula, and Jagadamba Chandrasekhar. So it's essentially a corporate matryoshka doll. The family controls the offshore holding company, which in turn controls Indo-MIM.
So, when we add up the direct holdings of the individual promoters, along with their corporate promoter, Green Meadows, we arrive at a huge number, 92.21%. That is the absolute pre-offer control held directly by the promoters.
Let's break that total 94.59% pre-offer holding down visually. The promoters hold that 92.21%. The promoter group, specifically Anuradha Koduri, holds 1.13%. The tiny remaining sliver of 1.25% belongs to other selling shareholders, which includes the Indian Institute of Technology Madras and an individual named John Anthony Dexheimer. With over 93% combined ownership, the promoters possess pretty much unchallengeable voting power over literally any corporate resolution.
Part 5. Governance and Risk Factors. This level of concentrated control introduces some very specific red flags you need to know about.
Now, this is where things get really interesting. The DRHP is a strict legal document, right? But sometimes it reveals these fascinating little glimpses into family dynamics. Under Risk Factor 27, the company discloses that Ravi Chandrasekhar, a member of the promoter group, has an estranged relationship with promoter Jagidambat Chandrasekhar. Because of this, the company admits they literally cannot obtain the mandatory details regarding his entities to disclose in the DRHP. They had to rely purely on public domain information from government websites like the Ministry of Corporate Affairs and SEBI. It just goes to show how complex personal family relationships can directly impact a massive corporation's ability to fulfill strict regulatory disclosures.
And there are a few other major risks you absolutely need to pay attention to here. Risk Factor 54 notes that Green Meadows Investments Limited, again, that corporate promoter holding almost 91% of the shares, is primarily an investment company and basically lacks adequate experience in running actual operational companies. Then, Risk Factor 55 bluntly states that, because the promoters and promoter group hold 93.34% of the equity, they have significant control over major policy decisions. The DRHP admits this concentration of power might actually disincline potential new investors. On top of that, they disclose past property acquisitions from entities related to the promoters. Now, while they state these were conducted at arm's length, it always presents potential conflict of interest scenarios that the audit committee has to heavily monitor.
Part 6. Why this matters. Let's talk about how you should evaluate this leadership as an investor.
So what does this all mean for you? Well, evaluating an IPO is about a lot more than just the balance sheet. It is fundamentally about trusting the natural persons who hold the power. The promoters dictate the company's long-term vision and stability. With over 93% voting power, they completely influence the board of directors and all corporate governance frameworks. For a retail or institutional investor, this huge concentration of power means minority voices can be very easily overridden. This is exactly why top equity research analysts scrutinize the integrity and track record of promoters just as fiercely as they look at the profit and loss statements.
Ultimately, an IPO is a liquidity event designed to invite the public in. But with ownership this concentrated, the big question is, how much control is the Chivakula family actually willing to give up? In our next explainer, we're going to dive into the capital structure section of the DRHP to uncover exactly how this IPO will dilute their power. Until then, ask yourself, when you buy a share, are you buying a real voice or just a front row seat to someone else's vision? See you in the next one.